Welcome to the session. I'm so excited to be here with you guys today. We're going to talk about credit. I'm going to give you the credit tea that you all have been working and looking for. So my name is Shameka Bishop. I'm the owner and founder of RCA Credit Repair, and I am the Bishop of Credit, okay? And I'm a product of Cass Tech High School. And I have, and also Michigan Technological University. I graduated there with an electromechanical degree, and I'm just pursuing. And from today, I'm gonna talk to you guys about credit, and then we're gonna just get into it because I have some tips, a few tricks, and a few things you guys may not know, and we're just gonna talk about it and discuss it. So you all are able to reach me, RCA Credit Repair at bishopofcredit.com. You're also able to download my app on the Google Play Store for Androids called The Bishop of Credit. And I also have a credit repair book that's only 17 pages. It's called 17 Pages of Credit Repair Truth. And that definitely will get you together on Barnes & Noble and Amazon. So now that that's out the way, it's time for the Bishop of Credit to get into this, okay, guys? Because I'm very excited to be in your presence. So first of all, we're gonna talk about the credit bureaus, okay? I want you guys to know that the credit bureaus are not a federal agency. Okay, they are only a mediator between you, the consumer, and the debt collectors. Okay, when you have issues, the debt collectors are actually paying put in an application in order to put information or furnish information, that's the correct term, to the credit bureaus. Okay, so they are not a federal agency. I want you guys to understand that they are a dump of data. It's a data dump, okay? And all they do is just collect information about your name, numbers, and anything else that they have. They're a collector of information. And yes, they do sell your information, okay? So what makes up a credit score? So we have your payment history. Your payment history is the most important thing because it makes up 35% of your credit score. Okay, guys, start making those payments on time, all right? Every time that you are late on a payment or anything that reports to your credit bureau, that will bring your score down anywhere from 15 to 70, 80 points, okay? It depends on how high your credit score is, so how many points is actually gonna come off of the credit score, okay? So if you already have bad credit, you're gonna look at, 15-point drop, a 10-point drop, maybe 20. But if you have decent credit, I'm talking about 660 and above, and you make that mistake and you get reported late on the credit bureau, your score is gonna drop straight to the toilet, okay? So I want you guys to watch that. 35% of your credit history, 35% of your credit score is your credit history. And you also know what payment history is? Payment history, it tells the people that you are looking to get credit from if you are trustworthy, okay? And that 35% is gonna tell them that. That payment history says, I am trustworthy to get your credit. And if your payment history is low, when you look at those credit reports, you have 100% payment history. That's excellent. And then you miss one payment of 30%. You miss one payment, it'll go down to 97%. You're already in the yellow zone of hold on, yield. You've made too many late payments. So I want you guys to remember that payment history equals trust. And if you don't have a good payment history, your trust level will not be very good with individuals who are trying to give you credit. However, the next thing is your credit utilization. And I find that credit utilization is one of the next most important things is 30%, y'all. So if you put the payment history of 35%, you have credit utilization of 30%, that is 65% of your credit score. So that means that just those two things right there, and everyone's gonna ask, how can I get my credit up? We're gonna talk about that, so don't worry. But that's 65% of your credit score, okay? Payment history and credit utilization. You have a credit card and it's $1,000 balance. You spend $800. You have now used 80% of your utilization of that credit card. You know what that tells the credit card companies and anyone that's looking at your credit card? They need credit. They're hungry. They're spending and spending and spending, and I can't trust them because their credit utilization is too high, okay? Bringing that down little by little. I'm gonna give you guys a wonderful tip on how to bring that utilization down and how to get some credit scores in order just by bringing your utilization down, okay? So that's 80%. That's the 80% utilization. You don't want to go over 30%. That's like the key rule, 10% or less is optimal. But you do want to have that 30, you do have that little leeway where if it's 30%, you're like, okay, well, you're a little high, but you got it, So keep it low is the way to go. You got that? Keep it low. It's the way to go. That lets individuals know that she has $1,000. He has $1,000 in credit, but he's only using $69. He's only using $100 of that credit. That means that they're using it as needed and they're not living off the credit. They're not desperate and in need of the credit. And for those individuals that will say, hey, well, I pay my credit card off to zero balance every month, that still does not mean that you will get a credit limit increase or that you're paying your credit cards properly. I'm going to tell you how, so watch out now. So just because you're paying it off 100% every single month, that just means you have money. It does not mean that you have credit management. It does not mean that you have any financial management. That means that you have some cash in the background and that you're able to pay it off 100%. And then when you do pay it off 100%, what happens? You have $1,000 balance credit card and you pay off, you spend $800 and you pay the $800 to have a zero balance. You're gonna go and use $200 or $300 of it. Then you're gonna use $500 more of it. And then you're gonna use the whole $800 that you just paid off. I got a tip for you guys. Be patient. So I want you guys to bring that utilization down. It's 30% of your credit score. And if you want that credit to come up, utilization is the way to go. Trying to tell you. All right. So let's go to my next topic. Decreased debt equals an increase of credit scores. And I want you guys to remember that. When we're talking about businesses and most people want business credit, right? When you get that business credit or looking for, what are they doing? Checking your personal credit. They want to know, what is this person doing on their own personal credit for me to want to give them any business credit? Most businesses, they close because they have a lack in capital. And they have a lack in capital because they don't have the cash for themselves and no one will give them a loan because their personal credit scores are not in order, okay? Let's get those personal scores in order. So all you out there who are entrepreneurs, who are looking for this capital, you're gonna have to get your personal credit together before you can even think about anyone giving you any business credit. And that's just what the real is. Now that's some tea. So, any other ways that you're going about it is gonna be the harder route. getting your personal credit together is going to be an easier route. Number one, for yourself and for your company. I prefer the harder, easier route than the easier, harder route. Think about it. So we're going to talk about really quickly. And then after I talk about this, I'm going to open up for questions because I've said a lot and I'm going to be skipping around because there's a lot dealing in credit. Okay, credit repair and credit itself is a big deal. And there's so many things that that credit that takes place in order to get that perfect credit score that you guys are looking for, that I can't even give you guys all that information in an hour. You know, that's why you should contact me, okay? But let's talk about another percentage of your credit score is your credit mix. What kind of credit do you have? Do you know that a person with a 720, 730 credit score can get denied for credit? And you say, well, why, Shameka, why would they get denied? Because they don't have a mix. They may have just one single account on their credit report, and that doesn't say that I'm credit worthy. Credit scores equals credit worthiness, okay? So just because you have one account on your credit report and you have a 750 credit score does not mean you're going to get better terms, or even if you're going to get approved for the particular loan that you're looking for, okay? A person with a 670 or a 680 credit score has a more chance of getting that loan or that car loan because they may have a good mix of credit on their credit report. They may have leased or financed another vehicle in the past, and they say, well, hey, they have a good mix here. I can trust them. They've had several different accounts. They're all in good standings. And although their credit score is lower than this other person's credit score, they have an excellent payment history, excellent utilization. Their inquiries are low. They've never been late for a car payment. They've paid their car down to a $0 balance. So I want you guys to remember that your credit score is just a mix of things. And when you're getting denied or you're getting approved, there is a variety of different in the background, in the underwriting in the background of who's getting what and for what reasons, okay? So revolving credit, this is what I want you guys to get. So when we're talking about credit, you need to have a mix of credit. You want to have revolving credit and you want to have installment credit. Okay, what's the difference? Revolving credit are credit cards and store credit cards. You use it, you pay it. You use it, you pay it. You use it, you pay it. Okay? That shows your trustworthiness. Because guess what? If I loan you some money and you don't pay me back, oh no, I can't loan you any money anymore. You're untrustworthy. It's the same thing with credit if you're relating it to real life, okay? So your revolving credit are your credit cards and your store credit cards. Using it, paying it, using it, paying it. Your installment credit are your student loans, because once you get it and you pay it off, that account closes. And it could be a good thing or a bad thing for your credit, okay? That's why I say it's a whole mix and just a whole barrage of things that that are entailed in your credit score. So you have student loans, you have car loans, personal loans, let's see here. That's about it. Car loans, student loans, personal credit loans, home loans, mortgages, different things like that. Those are installment credit. So when you're getting that installment credit, when you pay it off, that account closes. And once it closes, it's not going to be used to calculate your credit score anymore. That's crazy, isn't it? I know, right? So I have paid off $10,000 in credit and student loans. And then once I pay it off, my credit might go down. My credit might go up. I don't know. So that's what installment credit is. And that's the reason why you want to have a good mix. Because if you only have installment credit and an account closes, your score is going to decrease because that's one less account to calculate your credit score. Now, once that account closes, your payment history on that account closes. Like, wow, how many more things do I have to look forward to, right? So you lose out on your payment history, and you also lose out on the fact that it is an open, viable, and good account. Okay, so that good mix of things on your credit will help you in the long run. Okay, so I gave you guys a good earful. Let's open this floor up for questions.
Hey guys, if you guys have any questions, please put them on the chat right now so I can pull them up for Shameka. Feel free to just put in any questions you have. Okay, Tressa has a question. She's asking, what is debt to income?
I'm sorry, repeat that.
She's asking, what is debt to income?
Okay, so your debt to income ratio is important because it's just like your credit card. If you make $10,000 a year and you have $9,000 in debt, that's your debt to your income ratio. Okay, so there's no way that you're able to live for credit and have more debt than what you're making. So everything I'm going to tell you guys, I'm not going to use any or anything like that. We're going to keep this cool, calm, and just a down-to-earth credit talk. Once again, if you make $10,000 a year and you're $9,999 in debt, that's your debt to income ratio. It's zero just about. So if you make $10,000 a year and then your debt is only $1,000, you have much more room to be able to incorporate more debt. And everything you do equals debt. A car note is debt. Credit cards is debt. Home loans are debt. Okay? So the more debt you get, of going over your income level, no one's going to give you any credit when they're looking at how much you make a year and what you're asking for or how much debt you actually have. So bottom line, that's your debt to income ratio.
Thank you, Shameka. Marcel has another question. It says, how do I increase my credit limit? I have 720 and use a credit card for all my stuff and pay it off monthly, but hasn't really helped.
Okay, now I heard how you get your credit increased by what?
He says he has one credit card and his credit score is 720 and he pays it off monthly, but it really hasn't helped him increase his limit. So if you could give him any tips to do that.
Marcel, I want you to stay tuned. And how are you? I got something for you. I'm going to put it in the chat box at about 2:30. Okay, and then we're going to talk about it. And what it is how to pay your credit cards. So and once again, if you heard earlier, just because you pay it down to a $0 balance every single month does not mean that you're credit worthy. It doesn't mean that someone should give you more credit or should give you an increase in balance. You know what the important question is, Marcel, is how much are you using? How much of the credit are you using every month? So if you have a $1,000 credit card, are you using 1,000? Are you using 999? Are you using 500? So that's the major question. It is your utilization. What are you using? How much are you using? You know, those companies, they look at that. When they're giving out those automatic credit increases, or you're calling in, to get that credit card, they're going to look at your credit usage to see how much you're using. And if you're not keeping that balance low, that 30% or lower, sometimes that 10% optimal or lower, no, you will not get an additional credit increase. And I'm not the company. The company does have their own qualifications to get in this, but when you're dealing in those in credit, just because your credit score is a 720, don't mean you're going to get it. You might just be using too much, and on top of that, outside of that credit card, Marcel, if you only have one credit card, you need some more credit. You need some more credit. Go get it. Okay? That credit is for you to go get. With a 720 credit score, go apply for another credit card. Okay? I love Capital One, and I am not an affiliate with Capital One or anything like that. I just happen to like their practices as far as their of how they help people to build their credit and things like that. Okay, but that's just a suggestion. Go get you another credit card. All right, you want to have a mix of credit. And once again, if you heard me earlier today say you want to have a mix of credit, and you don't just want to just be stagnant and just have that one credit card, because you're never going to go anywhere with just one credit card on your credit report. You want a good mix so that when you are going out for those loans, when you are asking for credit increases, they will look at your I don't want to say your credit history. They're going to look at your trust history and see, are you worthy enough to get more credit? Any more questions? I hope that answered for you.
Mm-hmm. We have like a lot of questions. So do you want to answer them now, or do you want to do it later?
I'll take another question.
Okay. I'm just going to pick one because there are like at least 20 questions. Okay. So this question is from Shanice. What is the best way to dispute any late payments on your credit?
Okay, so when you're dealing in credit, and how can I put this? Okay, when you're dealing with credit, the Credit Increase and is the Fair Credit Reporting Act, the Fair Debt Collecting Practices Act, the Credit Card Transactions Act, the Federal Register, you name it. Okay, you have to know the credit laws. And anyone that's just sending in generic papers, disputing late payments, saying, hey, this is not my payment, it's not going to cut it, okay? Because a late payment is a late payment. And you can contact the company and you can ask for a goodwill. I've been really good with you guys. I did happen to mess up, whatever your issue was during that time. Sending a goodwill letter to the company will potentially help you, and they may remove it that way also. But another way is if that particular late payment is not reporting accurately, and that's what RCA Credit Repair do. We make sure that anything on your credit report is being reported accurately, and we dispute according to the credit laws, okay? So any inaccuracy, if it's inaccurate, you can dispute it. And if it's not inaccurate, they're not going to remove it because they have to report it accurately, okay? But try sending in a goodwill letter to them and, explaining your issue during that time. And if you have, a bunch of late payments, they're not going to remove that. They're going to say, you're consistently having, late payments. And on top of that, I suggest you get a calendar, get a Rolodex, get a reminder, anything, because credit is like a baby. You got to hold it, you got to rub it, you got to hug it, you got to kiss it, and you have to pat it because it is your baby, So make sure that you put a timer, put it on your calendar so that from here on out, you won't have those late payments and those late payments won't be accrued. But let me give you a tip. Tip time, okay? So your payments, you have 30 days. If your payment is due on the first of the month, okay, here's two things. Your payment is due on the 1st of the month. You have to the 29th of the month to get that payment in before they report that payment as late to the credit bureaus, okay? That is so important, y'all. That is so important. You got 30 days, 29 days, but on that 30th day, if you have not paid that bill, if you have not, and it has not processed in their system, you are going to be reported late. Your credit score is going to drop like a brick. Okay, you have 30 days. You may have to pay that late payment fee to the company for being late, but they cannot, and it is against the credit laws because credit has laws too. RCA Credit Repair, we dispute it according to the law because additional credit knows the law. Okay, and so that's it. Get those payments in on time, and you have 29 days before they're going to report you late. Okay, so what the thing you're going to have to do is worry about is paying the late fee to the company. Okay, but they're not going to report it late to the credit bureaus that you were actually late, and that's important to know. Just because you're 2 days or 5 days late, they're not going to report that couple of days to the credit bureaus. You have 29 days, and on that 30th day, definitely believe that they're going to report it. So you guys put a reminder on your phone. I can't express how much your payment history and your on-time payments really matters to your credit score. Okay? All right. So before we take another question, I want to talk about credit scores. And I get a lot of these questions. Why are they different? And if you guys have been here from the beginning, I was talking about that the credit bureaus are not a federal agency. Okay, they're a business just like I'm a business, and they just got a little clout. And and the people who report that information, those debt collectors, or those furnishers of information, let's be proper about it, the furnishers of information, they put an application in to submit your information to the credit bureau. And because it costs to submit your information to the credit bureaus, sometimes they won't report it to all of them. Sometimes they're just report it to one, Sometimes they're just reported to Experian, but it won't be on your TransUnion and your Equifax. Sometimes they'll just report it to TransUnion and it won't be on your Experian or your Equifax, So it all depends on what the company is doing and if they are reporting that particular account to each and every credit bureau. And sometimes you'll get, a $10,000 loan from some of these unknown companies and they won't report it at all. But the very moment that you don't pay that bill on time, guess what's going to happen, guys? They're going to report it, okay? They're going to report that Joe Blow did not pay me on time. Joe Blow has not paid me in 30 days, haven't paid me in 60 days, and haven't paid me in 100 days, okay? Let's not get caught up with that. We have low credit scores is mostly because of that payment history. A lot of people are concerned about inquiries. Get the inquiries off. Inquiries. I got to get them off. That's the inquiries. Okay, that is the absolute least of your worries. Your payment history and your credit utilization should be on the forefront of your mind. So let's reconstruct our mindsets, okay? And this is what this education is for you guys today, is to reconstruct your mindset to know that that we can have a balance. All you have to do is put it together, all right? And so that's the reason why you do have different credit scores, and that's the reason why some scores are higher than other credit scores and some scores are lower than other credit scores, because you may have an account on Experian that you have 3 late payments on. So your Experian credit, but it's not reporting to TransUnion or Equifax, and so your credit score on Experian will be much lower than much lower than your other 2 because you have late payments on it and it's only reporting to that one bureau. So I hope that answers your question. I see. Oh, that was my question, wasn't it? I was talking about that. Okay, so because we're just going to have some credit fun today. This is not going to be a stuffy, tutorial or education today. We're going to have some fun. So let's see here. What else I want to talk to you guys about?
There are a couple of more questions. Do you want me to put them
Sure.
out? Yes.
Let's
Okay.
go.
So this question is from Leroyce. He says, I'm just starting a business. I want to establish business credit, but have zero revenue right now. What can I do? Also, I looked into starting a NAV account. Should I tell them I have zero revenue now or wait?
Okay, so I'm not going to answer the second part of that, but I will answer the first part respectfully. So earlier, I spoke about business credit. Okay, and a lot of businesses close down, they shut down their doors because they have a lack of capital, a lack in revenue. No one wants to give them loans. They can't keep their doors open because they have poor personal credit. Okay, your gateway to business credit is going to be personal credit. You're going to have to get it together. You're going to have to get those collections together. You're going to have to start making sure that your payment history is good. Your credit utilization is good. And if you want business credit, you've got to take care of that personal credit. And that's just what the bottom line to that part is. I forgot, what is the next part of that question? The business credit?
He was asking something about an NAV account. Should he start one? Should he tell them that he has zero revenue or just wait?
Okay, that's the question I'm not going to answer. That's not part of the educational today, but your revenue will come. I mean, you've got to work on it. You've got to, no one is going to give you any money if you don't have any money coming in. You will, and some people will, but you got to have a tremendously large credit score. That credit score has to be high, and they have to be able to see, even though you don't have any business credit and you don't have any revenue coming in, and as a starter business, if they're able to look at your personal credit score and see that you are on point, on point with your personal credit, then they're more likely to give you that business credit in order to get that capital that you're looking for, in order so that you can expand and get yourself out in the forefront of individuals and people, and have the money to do so. So I hope that answered your question.
Okay. We have like a couple of more questions from anonymous people.
Okay, I'm gonna pause that question for a second.
Okay.
Because it's 2:32, and I told you guys I was going to give you a little bit of information at 2:30. Okay, so I want everyone to go in their chat boxes, and we're going to talk about this. Okay. Somebody's going to stop my video. No, I'm not. I'm just going to go to the chat. I'm going to put something in here for you guys. And this is what we're going to talk about for a few minutes, because this is the most important thing I want you guys to get. Besides paying your bills on time. We got to pay those bills on time, y'all. We have to get it together. We want to have generational credit. We want to teach our children credit. And then after this, let me write this down. We're going to talk about how to get your children credit. Okay. Do you guys know, I can't see myself on here, but do you guys know that people with bad credit, you're called subprime? You're called subprime. You're not called bad credit, you're called subprime. And I want you to look up the definition of subprime. You're going to be like, okay, subprime, my goodness, do I have to be that? But you're subprime when you have bad credit. I just want to put that out there for you. So when you hear that, that is a derogatory term for a person who has bad credit, subprime. So here, I am pasting it now. All right. Okay. Everyone go to their chat. And I want you guys to look at this. This is the T. Oh, let me see. You don't see anything? Let's see here. It says to all panelists, send to all panelists and attendees. All right, here we go. I'm gonna put this up again. I got it back so you guys can see it. All right, can you guys see it now? Let me know. Post it in the chat if you can see it now. All right, all right, all right. Thank you guys. Let's talk about it. Let's talk about how we're gonna pay these credit cards every single month. Because let me tell you guys, just by doing this, you can get your credit scores increased in less than 30 days. I know that's what y'all been waiting for. I know that's what you guys been waiting for. How can I get my credit score up? Okay, here it is. Let's talk about it. When paying your credit cards each month on time, check your credit report to see what balance the company has reported for the prior month. So when you go, and this is going to make you guys get acclimated with your credit reports. You know, people are scared to look at their credit. You know that people are afraid to check their credit reports. And I'm here to tell you guys that bad credit is not a scarlet letter. It is not a scarlet letter. And I do not want you guys to feel like it's a scarlet letter, okay? Because bad credit can be repaired. The Bishop of Credit says so, okay? Bad credit can be repaired. And just because your credit is bad, don't hold your head down. Don't be frustrated. Don't be worried. Just get it together. That's it. Just get it together. And here's the key right here, all right? So you want to pay those credit cards on time. It's going to freeze when I go back to the chat room, guys. So you want to make sure you pay that credit on time, all right? Go to your credit reports and go and look and see exactly what they're reporting for you for that prior month. So, so that way you will know exactly how much money you need to pay on your credit card. You definitely got to pay the minimum balance, but I am suggesting that no one ever just pay the minimum balance. Your interest rate is probably higher than your minimum balance, so you don't want to do that. But so let me go back. Okay, so the example of how to pay it. So say your credit card balance is $234. Okay, and these are just estimates in the month of December. So you looked at your credit report, you saw in December the company reported that you paid $234. Okay, you spent some more money on that credit card, since you paid on it, and so you spent some more money on that credit card since you did pay it down. So you're like, okay, last month they reported $234. You got to do whatever you got to do to make sure that when they report for the month of January, that reported balance is going to be less than what they reported for January. So you're going to make your payment. Make sure definitely that it's the minimum balance, and these are just mock numbers. Definitely more than the minimum balance, and make sure that your payment is going to be more equal to or more than when you pay it, it's going to be less than that prior month's balance. So you're going to make your payment, and then they're going to report to the credit bureaus that now your balance is only $199. Okay? It's only a $35 decrease, but guess what? It's a decrease. It's a decrease in debt, and decrease in debt equals increase in scores. Hello? Trying to tell you guys. So in January, they reported $199. So now in February, you're going to make your payment again. And this time they reported $168. Now, like I said, these are just mock numbers. Of course, I will want you guys to pay more than that, pay more than $40. But sometimes that $40 is all you have, okay? So, and this is the reason why I got it, low like this. Some people have high balances. Some people have low balances. Some people have credit limits that are low, and some people have credit limits that are high. However, so also when you're paying on time, on your due date, Please do not use your credit card for 5 business days. Boom, here go the T right here, guys. To allow the company to process your payment and for the billing cycle to end. Okay, I'm gonna come back right now off of that one. 5 days, and let me tell you why I say that, okay? If your payment is due on the 1st of the month and you've made that on-time payment, all right? If you paid $100 on your due date on time, okay, I'm sorry, I was looking at that question. If you paid that $100 on your due date on time, but tomorrow you're going to spend $50, they're going to report to the credit bureaus that your decrease in debt is only $50. You know why? Because you didn't even give the company enough time to end the billing cycle. The billing cycle is different for every company. Okay, it's normally, sometimes for some companies, it's the day after your bill is due. Sometimes it's 2 days to 3 days after your bill is due, because they have to have time to process your payment. They have to submit that information to the credit bureau. So what I'm telling you guys is that when you are making a payment on your credit card, wait at least 5 business days to go use that card again. You want to make your money work for you. Every dime that you are paying on your credit cards, you want to make sure that money is working for you and only you. Okay, this is your credit, this is your social security number, and it's your name. Make it work for you. So when you make that on-time payment, don't use that card. I don't care how much you need it, unless it's desperate, unless you're really desperate and you need it because you know everybody got stuff going on in their lives. But if you don't have to use that card for 5 business days and you're not going through anything, because you know life happens, don't touch it. Wait them 5 business days. Let them process that payment. Let them report that to the credit bureaus, and let that billing cycle end. Okay? Let that billing cycle end. All right? So I just saw Cassandra's question across the top, and I just want to touch on that because Cassandra, that was a good question. You said, Cassandra said, I'm a little country. I was born in the South, so sometimes I get people's names mixed up. I'm sorry. But Cassandra says, I pay my credit card a week in advance. Does that make a difference, or does that help? I suggest if you to pay your credit cards multiple times throughout the month. You know, you may not have the money at the end of the month or whatever it may be, but even if you pay your credit card a month in advance, that billing cycle has not ended, Cassandra, it hasn't ended. It's not going to end until after your payment was due. Okay, so I want you to remember that it's not going to end. That billing cycle does not end until after your payment due date. All right. So even if you paid it, 25 days in advance, it still is not going to make a difference. If you spend that money, when that billing cycle ends, they're going to report exactly what your balance is. All right. So I suggest to everybody that if you can't make multiple payments throughout the month, when the payment is due, make that on time. I'm going to put that in big old, I should have had that in my background. On time payments, y'all. On time. I don't care if it's the minimum balance. If that's all you got, pay it on time, okay? And then you can work on that on the very next month. Because the thing about credit is that every single month, it can change. You can have a 700 credit score today and have a 500 credit score tomorrow, okay, guys? It's all about payment history and credit utilization. Remember that, all right? It's more to it. I only got a little bit of time. Oh, my gosh. But I'm going to try to touch on it. So let's go to the next question.
Okay. Okay, I'm going to ask you the latest question which came in. It's from Nicole. My biggest concern with only spending a small amount on the credit card each month is losing out on the cashback opportunities. What do you suggest in regard to this?
Well, that's something extra, Nicole, that you signed up for. And, with the cash back, they say you got to spend it in order to get it, right? So if you're not spending it, then you're not going to get it. But that doesn't mean, spend a tremendous amount on your credit report. On your credit card. That just means that you're going to have to spend enough in order to get the cash back. And if you're not in in the place, in the space, because you're trying to build your credit to be spending that much, then you are losing out. It's an amenity. You know, it's an amenity to the car that you don't have to use. And then they want you to spend on those credit cards. See, that's the catch-22, y'all. They want you to spend that money on the credit cards, but yet when you spend it, it's all about how you spend it, how much you spend it, and, you know, things like that. Because they've got to make money off you too, you know? And if you're not spending, if you're only spending $5 a month on a credit card, you know, they're not making any money off you. You're worthless to them in their eyes. You know, you're a customer, yes, but we're in business to make money. We're extending credit to you in order so that we can make money. And if we're extending this credit to you and you are not spending the credit, we can't make any money. So I hope that answers your question.
We have time for like 2 more questions.
Okay.
I'm going to ask you the next one. This one's from Lannis. Where should we go to get the most accurate credit report? Also, is the report easy to read and comprehend?
Okay. So I'm not going to give you any specific companies because myself personally, I do not believe in paying for a credit report unless I'm looking for some specific details and trying to repair my credit, because a paid credit report gives you much more information than any free credit report will definitely give you. There are plenty of free credit reports out here, guys. And if you're on the path to repair your credit, you know, and you're just looking to see what's wrong, go get that free credit. But if you're trying to repair your credit, then I would suggest go and get a paid credit report. But they're not paying me, y'all, so I can't be telling y'all who to go get it from. So I just suggest that, you know, whatever you're feeling, if the price is right, you know, and it's affordable, go get it. And, you know, because every paid credit report, reporting company, they have different, you know, things that they can offer you as a client. I hope I answered your question.
Thank you, Shameka. Okay, so the next one's from Jamal. What is a good balance for credit utilization?
I say if you can't keep it at, if you can't keep it at 10% or lower, 30%. You know, everybody don't have money like that. And everybody don't have the education to only keep it at that 30%. You have to make your due diligence and keeping it low. I suggest 30% or lower. If you want to optimize your credit, keep it at 10% or lower. If you are looking to get those credit increases from those credit card companies, from being with them, 10% or lower is the way to go, y'all. You know, it just gives you a higher chance to get those credit increases when you request it, and when they are just giving you that every 6 months or every 4 months or whatnot. Just look at your account to see what you're doing. So I suggest you keep it at 10%. And if you can't do that, try, you know, 30%. But, you know, guys, credit is not just something that, good credit is not something that happens overnight. Like I said earlier, it's like a baby. And just like you have to give the attention to a newborn, they can't do anything for themselves. That's how your credit is. You know, you got to feed that credit. It gets hungry. If you want something, you're going to have to get it and feed that credit so that you can go get it. You know, if you're hungry for it, feed the credit. If you're hungry for it, feed the credit. And I'm going to say it again. If you're hungry for it, feed the credit. And you're feeding the credit by your payment history, making sure it's on point. Your credit utilization, making sure it's not on point. Please, guys, if your credit is in a 400, 500, stop applying for credit. You're not going to get it. I'm the bitch for credit, so I'm just going to keep it real with y'all, okay? You're not going to get that credit. Stop applying. It is hurting you way more than you think. Because if you have 39 inquiries on your credit. First of all, stop applying for credit, okay? If your credit is in the 400s and the 500s, you're not going to get that credit you're looking for. Okay, contact the Bishop of Credit. We'll get you together. But you're not going to get that credit. You know, stop applying. You know what that tells people when they go look at your credit report? Oh, they're desperate. Ooh, I'm not going to touch them. They are desperate. Desperate. That's what a huge amount of inquiries says about you. Without them looking at you, without them talking to you, without them doing anything else, they says that this person is in a desperate zone right now. They've applied to whomever is going to give them credit. And also, when you guys are going to the car lot, to, sometimes those buy here, pay here's, or those places that say good credit, bad credit, we're going to get you into a car, regardless. I want you to be mindful that they did not care about your credit score decreasing after you've gotten your vehicle. They're going to run your credit 50 billion times in order to get somebody to approve you, okay? So your credit was ran 999 times, and then on the next time, that's when you got approved, and you got 999 inquiries on your credit report. But the credit bureaus say that if you apply for car loans or things like that, all within this one particular space of time, it's not going to affect you that much. Think about it again. Stop doing it. So when you go out there looking for those cars, let those car dealers know that, hey, can you please only apply for your top 3 people that you think that my credit score will get me they'll give me a car loan with my credit score. Okay. Now, if I got a 550, please only contact your top 3 or your top 5 people that's going to give me a loan with a 550. Okay, please, and you have to care about your credit, because once again, and that's a lot of people say, oh my God, they ran my credit 1 billion times. They're not concerned about your credit. You have to be concerned about your credit. That's why I say y'all gotta it's a baby. All right, it's 2:51. Oh man, I want to say so much more, but we get time. Anybody else? Oh, there's a lot of questions on here.
Yes, there are a lot of questions, but we have only 3 minutes to go. So maybe I could just ask you one last question, and then we can wrap it up with that.
Okay.
Okay. This one's pretty simple. It's from Benita. How often should we request a credit increase?
If you're doing what you're supposed to do, the company is going to give you a credit increase automatically. So remember that part. I would say every 6 months. Most of these credit companies, they will not pull your credit again if you're already a member with them. They'll look at your account, see how you've been doing, how you've been paying, if your credit if your credit utilization has been low, have you been spending a lot, have you been being responsible and trustworthy with your credit, and they're going to give it to you automatically. But I would suggest every 6 to 8 months, if you know you've been on a good path and your credit utilization is low, you paid on time. I got them big old letters behind me saying on time payments. They're gonna give it to you. All right. It also depends on what your credit score is too. And just because you've paid on time with them for 6 months or a year, and you've kept your utilization low, doesn't mean that they're going to give you credit either. Once again, it's a barrage of things that the background underwriting incorporates when you're talking about getting those increases. So I would contact the company and ask them what you guys look for. Do you know y'all can ask them that information? Do you know you can contact the credit companies, your credit card companies and your car note companies, and you can ask them What day do you guys report to the credit bureau? And they are obligated to give you that information. Do not let them give you the runaround. This is your name, your social security number. This is your credit, okay? And this is why I really call a credit report involuntary information, okay? Because who really wants that information that they've messed up to be on a credit report? Because everyone messes up sometimes. You know, no one is exempt from having, you know, just messing up. But you can come back from it. You can come back, guys. I'm here to encourage you guys today. Go repair your credit. After this pandemic, you're going to need that credit more than ever. Do you know that Chase Bank is during this pandemic is giving you a 700 score and also at least a 10% down payment for a mortgage? Wow. Wow. You know, and of course, there's still the FHA loans. There's still the conventional loans and things like that. But you guys are going to need this credit more than ever. I can only just be totally frank with you guys. And you're subprime if you have bad credit. Once again, that's a derogatory term for people with bad credit. You are subprime. I don't want you guys to be subprime. I want you to be prime. I want you guys to be able to look with your head up high and be able to walk into a store. You know what credit is? It's a difference between being called Shameka and Miss Bishop. Okay? Okay? It's a difference between being called, hey, you over there, and Miss Bishop when you have your credit together. I want you guys to remember that credit is power. I only have 5 minutes left, and I want to tell you guys that credit equals access. Access equals opportunities, and opportunities create options. I'm going to say that again, y'all. I'm going to say it again for the people in the back. Credit equals access. Access equals opportunity, and opportunity creates options. Trust and believe that. I should drop the mic on that one. I'm going to use my stylist. Drop the mic. So I want you guys to pay attention to your credit, rub that baby, hold that baby, kiss that baby, caress that baby. And if you all need any support in your credit, you can contact me, Shameka Bishop, RCA Credit Repair. I'm on Instagram, RCA Credit Repair, Facebook, RCA Credit Repair. You can contact me at 248-618-2282. Go on my website, www.bishopofcredit.com. You can purchase my book, 17 Pages of Credit Repair Truth. It's on Barnes & Nobles, and it's also on Amazon, 17 Pages of Credit Repair Truth. And it is only 17 pages, y'all, to get your credit together. So definitely, RCA Credit Repair, we are here to educate you. We are here to, and I couldn't give you guys all the tea because I leave that information for my clients. You know, my clients are only privileged and privy to getting the good stuff, okay, the good information. And, but just remember, bad credit is not a scarlet letter. You can come back from it. Don't feel bad because you've done wrong in the past. The past is the past. Let's talk about today. I didn't even get a chance to talk to you guys about getting your kids good credit. I'm gonna hurry up and do it real quick, okay? Real quick. If you are responsible with your credit, okay, add your children on as authorized users on your credit cards, okay? My 16-year-old has a 759 credit score, okay? She's almost 17. My 22-year-old has a 722 credit score. Okay, my 15-year-old, she has I think a 690 because, you know, she young. Go get them kids on. My 9-year-old has credit, y'all. Oh, I forgot, he was 10. He just turned 10. My 10-year-old has credit. Add them children on as authorized users as early as possible, okay? It's going to build their credit history. It's going to, so that when, and it's going to build them, I'm trying to go fast, it's going to build their credit scores up as time goes on. Educate yourselves about credit. My mother didn't educate me. My father didn't educate me about credit. I filed bankruptcy twice, y'all. Bankruptcy twice until I finally got it. And when I finally got it, RCA Credit Repair was born. So get your credit together. Add those kids on to your credit score, to your credit cards if they are good. Don't mess your kids' credit up by paying your being late, because when you mess your credit up, their credit messes up also. Okay, so only if you're responsible. Add them kids on as authorized users. And if you need a credit boost, add someone that is also responsible for their credit and they trust you. You can ask them to add you on as an authorized user also. Whew, I'll try to get that out as quick as possible. So I want to thank you guys for being in this place and space with me. Thank you so very much for taking out your time today to listen to me. To talk with me, to converse. Let's talk about this credit, because it needs to be generational. You're never going to go anywhere credit-wise if you don't get that personal credit together. I appreciate you all. I thank you all, and I am nothing without you all, okay? So get that credit repaired and contact the Bishop of Credit, okay?